Hello, guys. Hope you are doing well. So, today we will talk about trends. If you do trading, the biggest thing for you is to catch the trend reversal, how to find a trend, because whenever you need a trade, you will get it in a reversal when the market reverses. So, there are three main ways to find a reversal, which I will teach you here. Apart from this, the market has no other option to reverse the trend. Yes, if you like liquidity and other matters like resistance, which people look at for 22 years, are different. When the trend reverses, that is a different topic, but today we will only talk about trend reversal when the market reverses because your data is the same. You can only make a profit when you get a reversal. So these are the three ways for trend reversal. First, as it happens, like the market makes high lows, low highs, low highs, low highs, low high, and suddenly the last low breaks. Some people call this a break of structure, some call it a choke, and some call the same thing a market structure shift. So when the market makes high lows and low highs, and when the last low breaks, then in the market the trend has changed, the trend has shifted. So you enter in this area, and the market goes approximately 50% of the high and low, and you have to enter the market there. And these are different methods, but today my topic is only to tell you how trend reversal happens. This is a different topic, how to take entry later, but to find a reversal, the market will only reverse in these three ways. The market will reverse, right? So high low swing, high low points keep forming. Whenever the last low breaks, the swing low breaks, it means the trend has changed, the market structure has shifted. It can be for a short time, and if you see in the market that this is happening over a long time, then it can be long term and a big trend reversal. In a big time frame, there will be a big trend reversal, and in a small time frame, it will be valid for a short period. First, it happens that high lows and low highs form, and whenever the last low breaks, the trend has changed, and you enter from here, so you can short the market here. Okay, and this thing will work in everything, whether it is crypto, futures, or India's bank nifty. Everything works the same way in the market. The scan of algo works like this. Apart from this, it has no other option. So if you master these three things, you will understand the trend reversal and you can enter your trade well. First, when the low breaks in high low, you get a break of structure. Here the low breaks, you get a break of structure and you enter somewhere in its 50%, and whatever the premium and discount level is, you will enter there. And the second option is when the market makes low, low, and then it cannot make a new high. And after that, it creates a new low. I mean, when you get a low in the market like this, it means a trend reversal in the market. If you look, the market doesn't have the strength to break this high, then it prepares a new low, or like high low, it creates a new low. So in this, your trend has changed from here, and if you enter, you will enter at the midpoint of your recent swing point, high and low, and anywhere between the high and low, and run the market downwards. You will run it down to the imbalance, whatever your method is. You can use any strategy, etc., up to liquidity. Like any imbalance, you can go up to that. Any daily high low, whatever it is, that's a different topic. I won't talk about it in this video. In this series, I will only tell you how the trend changes in the market. When the market has a second option, like when the market creates two lows to change the trend, somewhere here your liquidity will be taken. It will give support, resistance, any area, and here too the market will take liquidity, change the trend here, and the same will happen here based on liquidity. I will explain liquidity in a separate video. I will tell you how to understand liquidity, how to find it. So after getting liquidity, the market will change like this, and you will get a break of structure like this. When a low is created, after that you enter somewhere here, and then you can use your exit point according to your strategy. And the market has a third option. When the market keeps making high, low, low, high, low, high, and then there is an imbalance here. If there is an imbalance in this swing, I will show you how it happens. And here the market covered the imbalance, so this is your break of structure where the trend reversal happened, and you will enter here. If this swing point is not broken, if it is broken, then you got the previous break of structure. And if two are created, then you got this one. And if two breaks of structure are not directly created, the change of character did not happen directly here, then the next swing point covered the imbalance. So this is also your break of structure, and you will enter somewhere here. I will show you on the chart, and then you will run it to the next imbalance or fair value gap, whatever it is. It's the same thing, imbalance, fair value gap, and then you will run liquidity. I will show you on the chart, and the same will work in the opposite for buying. I mean, for buying opportunities. This gives you options for selling opportunities, and it will work the same way for selling. If you reverse it, it will be the same. So I will show you all three examples on the chart. Here the market opened, it went up. This is not our topic right now. I will cover it in another video. Like you have this low created. First this low was created, high was created, low was created. High was created, low was created, high was created, and the market broke this low from here. So the fast example I'm giving, what you'll do next is look at its 50% area from high to low. Approximately the market will go up to there. You need to enter there and run it up to the liquidity. There's liquidity here and here. You can run it up to here, and there will be liquidity behind it as well. Wherever the market has gone, that's why it has gone down to here. So your topic is different. So you will liquidate it. My job in this video is just to explain how the trend changes in the market. So the market made a low, a high, a low, a high, low, a high, and suddenly it broke the last low. After that, enter at 50% here. You will find imbalance somewhere here. You entered there, and after that, you will run it down to the imbalance, and then whatever your method is. And another thing, here we have a third example as well. Here, the market's last low was high, the next low was here, and this is our high, and this is our low. Okay, and here is the imbalance. Imbalance means like any candle should have its wick matching. Like this first green candle, look at it, this selling one, I have changed its color. Sorry, this is the buying one, and this black one is the selling one. And the third candle, its wick and its wick should match. If you find it anywhere here, if it doesn't match, then there is an imbalance in the market. Imbalance farewell, it is also called a farewell gap. And what happens in the market is that it has to go there. There are big orders here where the imbalance is corrected in the market. There was no trading here, so the market goes up to here. and from here take a reverse, a different topic came up. But I will only tell you about the change of character, like how the structure changes. And in the market, if it makes a high here, a low, after that, the market covered this imbalance. Our third example is the third type of change of character, how the third type of BS happens. Imagine there was an imbalance in the market here, chance up to here, and the next candle, I will mark it. This is the imbalance. And whenever there is a pre-op structure in the market, here is the high, here is the low. When this low breaks, there will be a pre-op structure. When this high breaks, there will be a break-off structure. And the third example I told you about is like this is the imbalance in the market here. Okay, and a big candle covered the imbalance. This candle also has an imbalance. How? Because this candle is very far, its wick is not up to the top. And this was the imbalance in the previous candle, the black one, and the next candle covered it. Whenever this happens in the market, then when the imbalance covered the imbalance, it has already become a break-off structure. You will enter in the next candle, that candle will not go much lower. It is possible it will go up to here, like it has come here. You can get an entry here, but it is very hard chance, like it is hardly like you will get such a chance. The market will give you an entry here again. So when the imbalance covered the imbalance with this candle, I got a break off structure, and the next third candle of the market will be placed. It will come down a little because there is manipulation in it. You might have heard of the concept. There is accumulation, manipulation, and distribution in the market, and when it comes down for manipulation, you can enter here and run it. Liquidity has increased here as well. There is liquidity at every high and low. Liquidity means there are people's orders, and mutual funds or big banks will have liquidity. It gives you a loss here, like it goes near the high and low, makes you exit the market, and then itself enters. So liquidity simply means where your people's and normal retailers high stop losses are placed. So this was the third example, like the imbalance covered the imbalance and it came to you. You will enter here in the next candle and your stop loss will be at the low, and you will enter till the next liquidity wherever it is placed. It is placed here and also above. This concept is different because the type of liquidity, like futures, works based on the session in the futures market, and in forex it also works based on the session. Like when the session is on, the Asian session and the London session, now my US session works accordingly. It gives more preference to liquidity. And this was the third example, and I will show you the second one, which was the second example I showed you. In the second one, you got the lows directly. There was no direct break of structure, like directly high, low. You got the break of structure directly, and the imbalance did not cover the imbalance. You will get the lows directly if you are in a selling position without breaking the structure. You can get an entry there, and if it is in a buying position, then you will get the highs. After two, you will get two highs, and then you will enter without breaking the structure. There is a kind of break of structure I will show you. Here it is. Here liquidity increased for one type, the market made a low, not a high. Like in a smaller time frame, we will consider this high in a 1 minute candle, not in 30 seconds. Low drag high, here it is. After that, we have this low. Then what did the market do? It made this high. Okay, after making this high, the market made a second low, and our Last swing point is here. Until this breaks, we don't get a swing point, and normal people don't know this, like that the break of structure happens like this. We only know that the break of structure happens like this, but if the market made a high, a low, a high, and then a low, then it made two lows, and it is necessary to break this low too. It made two lows, but our last swing point was here, and when the market made two lows, then you will get an entry here. When the market made two lows, then you have to enter anywhere at your stop loss will always be at high lows. You have to enter anywhere at 50%. Next liquidity till this is also liquidity, this is also liquidity, till next liquidity you will run this.